Hi and welcome back to my channel. This week I am up, and especially on the day we can see up $26 today. If we go ahead and look at the week, we are down $10, but definitely this big drop off that we saw in the beginning of the week, it can be attributed to most of those losses, and I'm not concerned about it at all. I did go ahead and invest another $50 this week, bought one more share of AT&T, bringing my total to 3 and buying some more Bitcoin. I have 5.8% of one Bitcoin. The focus of this video is going to be Michael Burry's prediction of an index market slash ETF bubble. It's something that he has predicted within the last couple of years, and other industry experts have predicted within the last couple of years. Definitely something that I want to take a further look at, and something that I think is going to be important to look at for the future. So we'll go ahead and get started into that right away. So Bloomberg has this article. It's a little bit old, back from September of last year, but it talks about why Michael Burry thinks that there's going to be a bubble in the ETF market. So they have a little bit of jargon here in the beginning, basically talking about who Michael Burry is. I've made one video about him in the past and what his beliefs were, where he became famous. So go ahead and take a look at that if you want to go back. But really the big things to notice here is that because people are diversifying their portfolios through index funds, it's creating what's known as a liquidity crisis. So I have this other article pulled up on Investopedia about what that really means. And there's a couple of, as they put them, key takeaways. So the way that they explain it is that you have an increase in demand for something and a decrease in supply. So if you've ever taken any sort of economics course, if you have any concept of this, what they're saying is that companies, individual companies, may be short on cash, need some in the short run, and simply don't have it. The big problem that we're seeing is that as people are investing in index funds, the index funds are being traded, but the company's individual stocks are not, which means that we have an increase in the demand for the stocks, but a decrease in the supply. It could be an issue. Some people say it will absolutely be an issue. Some people say it will not. But it definitely is something that I'm interested in. So here they talk about it. Liquidity crises can be triggered by large negative economic shocks or by normal cyclical changes in the economy. So these are part of the fears really that Michael Burry has, is that the economy could slow down and that could create a problem. And it may not. We could see problems without a slowdown in the economy, and that might be the most terrifying part, is that we don't know when, we don't know why, we don't know if, but it's definitely a possibility. So going back to this, he talks about the liquidity specifically. So basically the example that Michael Burry uses is that he counted just under 1,050 stocks that traded less than $5 million in the Russell 2000 index. This is a very large index, very well known, and he says that 1,050 is over half of those 2,000, but of those half, 456 traded less than $1 million during the day. This is troublesome because if companies are short on cash, if they are struggling, it could be very difficult to fix things in the short run. The other example he uses, the greater known S&P 500, isn't any different. 266 of those stocks traded under $150 million in a day. And the way that he points it out, that might seem like a very large cap, a very large number to use, 150 million. But when you're talking about the 500 largest stocks, that's really not anything at all. It's really more of a drop in the bucket. More interestingly to me, I think when he talks about Japan here, it's definitely different than what we hear about traditionally. So if you're not aware, Japan has had problems in the past. In some instances, they've actually had negative interest rates on their banking accounts because they want people to invest, or they want people to spend money. They want people to participate in the economy, and they're seeing a lot of cash hoarding. Michael Burry believes that this could actually work out well for Japan in the event of the world economy crashing again, or in the event of a liquidity crisis. People hoarding cash could be definitely an upside for them. There's no way of really knowing now, but I do think it's an interesting topic, as I discussed before. Now, this last article that I have pulled up is from CNBC, and it goes more into detail about why this has become an issue and really why the increase in ETF usage is worrying a lot of analysts. So the example that they use is the ETFs hold more than 11% of the real estate sector and almost 10% of the utilities sector. So this is very large portions of this. Now, I have two REITs, and certainly those REITs would be affected by this very much. Another example that they use, here you go, Tanger Factory Outlet Centers, 32% of its float taken over by ETFs, by far the most of any stock. Now, some of these numbers that they're using are specific, and again, these are specific companies, not indicative of the entire market by any means, but I do think that it's an interesting thing to talk about, and I think that those numbers are extremely important. Now, again, we can see that this company, Tanger Factory Outlet Centers, not doing so hot. So the S&P 500 dividend ETFs, as we can see in 2019, performed decently well, not great. Again, this does not include dividends, I don't believe. But again, this company, because they're seeing this shortage of cash due to really the increased prevalence of ETFs, they have not done so hot. Now, the reason that I bring this up is because if we go back and look at my portfolio, I have 4 positions that I think could be affected by this the most. Now, SPHD being my highest, and VTI being the next highest. So those combined, I have over $750 in my position. If we go ahead and look over the past week, we can see that SPHD has not looked great. Spiked up here to an all-time high this week, up to $44, but fell pretty rapidly after that. So you say, well, that's just one. What exactly does that mean? Now, if we go to the next one, VTI, we'll see something very similar. They had this large spike and then went downwards. That one not as prevalent as the other, but my 2 REITs are really where the biggest concern lies. So if we go ahead and look, Burry is my larger holding of the 2, 917 on that. I am down 6.5% on those, but it does pay a constant dividend quarterly that is very high. But again, if we look in the last month even, large drop off. If we look at the past 5 years, we see that they topped out here in 2016. We're back down towards the beginning of 2018, peaked up this last year, and is starting to fall. And if we go ahead and look at my other REIT, which I believe is my smallest holding right now, Four Corners Property Trust, we will see something extremely similar. So this one is not quite the fall off that Burry has had, but again, peaked here in March of last year, just under $30, and here down to about $27.50. And if we look at the past week, we'll see the same thing, very large peak and a drop off. Now, I've talked about it in the past. I'm going to do more research and try to understand this better because it is a difficult topic. There's a lot to discuss and a lot to understand, but I believe that it's important to talk about and definitely important to look at. Now, going back to my other positions, I'll go ahead and talk about Vivint Solar. This has been a great performer for me. We can see now up 37.71 all time, almost 13%. Up to about 779. The interesting thing about this one is that we've got some very high peaks and some very low valleys. So over the last month, up 8%. Over the last 3 months, up 14%. But when we start to zoom out in the last year, we can see that up and down and up and down. So even within the last week, it was down all the way to 726 and now up to 779. Very up and down, but again, I always talk about it. I want to increase my position here. I did have a couple more dividends come in this past week, which means that I could potentially buy another share or 2 in the following weeks, depending on how much more I'm going to be depositing into this account. But at the moment, we can see up about $34. If we go in the last 3 months, we can see up almost 6%. That's looking awesome. and all time just short of a year exactly, I am up. So I'm pretty happy with that. Now, Microsoft is another one that I always like to talk about, really because it's been great for me. So up 34.60 on that, almost 28% all time. Over the last month, fantastic. And if we look at the past year, tremendous. So I always like to show that just because that's my favorite looking stock right now. Now I've got a couple more. AT&T, again, I'd like to talk about because I did go ahead and purchase one more share of this week. Total return is only $3.09. Not one of my older holdings. I did go ahead and increase that position, but it's a smaller holding and a newer holding for me, so that $3 is not great, but not bad at all. And even if we go ahead and look down at the dividends that I've received, on November the 1st, received $1.02 in dividends, 51 per share. So that dividend will continue to go up. My last video, I talked about my complete dividends. I'm shooting for $100 this year, which is aggressive, but I do think it's possible. And I think AT&T is a big contributor to that. I've talked about it in a couple different videos, but cell phone providers are great dividend companies because they're selling 2-year plans that are paid every single month, so it is fairly predictable. And I also talked about in that video with the prevalence of 5G increasing this year or even in the next year, this could be a great play for me. So that $3 gain could be moving up very, very quickly. Now the last one that we'll touch on is Bitcoin, just because it is such a large holding for me. It is technically my largest holding, 431 as we can see. So SPHD right now is showing as a larger holding, but considering that I am down $154 all time on Bitcoin, this is still my largest holding. But I am price averaging my way down on that. The last $10 purchase that I made this week got my dollar cost average down to about $99.60. I'm under 10,000 on that. I'm optimistic. Definitely be talking about this closer to the Bitcoin halving date in May, but we will pick up then. So over the last week, we can see a downward trend and a couple of spikes pretty recently. So nothing great, nothing horrible. Now, as we start to zoom out, we can see that Bitcoin's flattened out, up about 3% over the last month. But because of those ups and downs, it's really amounted to not much at all. Over the last 3 months, we can see this downward trend with this one large upward trend here at the end of October. Now, if we look in the 1 year, we can see very large increase, and it has been moving downward ever since. But just like anything else, this downward trend, I think it's a great time to buy, and definitely something that I want to continue to increase my position on. And like I said, with that halving occurring this May, it's definitely something to watch out for, and I'm planning to make more content on Bitcoin in the future. And I will go ahead and drop my Robinhood link in the description. So if you would like to start a Robinhood account and use that link, you get a free stock and I get a free stack, so that's awesome. If you like the video, go ahead. If you like the video, then like the video and make sure to subscribe. Thank you, and I will be back next week.